Dun, 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 dun.
Live.
We are live on Facebook.
All right.
I'm waiting for you to share so I can share from yours.
But of guys. All right. Let's go ahead and share this wonderful awesomeness. Share now. And I'm sharing it to my stories. How about that?
Nice.
Yeah.
Oh, I need to get off of. I always forget in this part.
There it is. We here. I can turn this off so that way I can. All right. Ranny is in the building. She's the first one here. That's what I'm talking about. Go, Ranny. I guess I'll move it over so that way everybody can see the wonderful. Che Davis has joined us. Who is this Che Davis? Who is this Che Davis character? Who is
just a humble man?
What's the man?
Nice. Smooth. Very smooth.
Right.
I'll just leave that up there. All right, so now we're all in this together. What's up, Kamari? Wait, wasn't she supposed to be coming up with like some type of theme song?
Yes, but that is a worldwide premiere on Thursday.
Okay, all right. Wow, the countdown begins to a whole 48 hours.
I was thinking that.
That's
right around the corner.
Oh man.
You're ready.
You about to lose your job.
I love that song. This song is hitting.
Oh man. It is pretty cool. So I'm using my trade desk over here. We got a bunch of people jumping in. The Cool Kids Club are officially here.
Kamari said
Charting. Yes, we're starting off for the charts, man. Yo, today is special. It's very, very special. We're coming in hot. If you guys didn't notice what was in the description, it's talking about us beating the market. So it's happening.
I definitely beat the market today, for sure.
You know, today was a great day.
Yo, like that. Yeah, I was gonna say, like, if anybody was in the market today, I mean, like, let's give you a shout out. Just say that, hey, I was in, or I'm in. If you're in the market, go ahead and drop that. I'm in the comment section. We want to hear from you guys today. And notice, like, today is something special. If we're starting off with charts, I just want to put it out there for y'all. So, you know, you got a friend or a family member. This is like, we've gone through 12 other episodes. If you've missed every single other episode, you do not want to miss today's session.
Rubo from across the street.
Yo, what's good, Rubo? What's good?
Nelly is in.
Yes. In for the win. I see you.
Ruben, okay. In for the win. Oh, I need to see what's in Ruben's portfolio.
Hey, man.
Not the lunchbox.
Yeah.
Are we looking at lunchboxes now? Yo, man, if somebody got Twinkies in their lunchbox, I'm willing to trade you for something. Nah, man, it's about to be fire today. I mean, like I said, if you've been kind of like sitting back and waiting, I don't know why, but yeah, I think this is kind of like the last stand. Like, you can't.
Yeah, it's like just come on. Oh, shout out to friend of the show, Britta. She's in. We know she's in.
Oh yeah. I think Britta is definitely gonna love today's episode, by the way, especially if she, as a value investor. Also, I think, you know, slight hint trader. So, you know, you're gonna love today's episode today, Britta. We're gonna take that off for a hot second, just so that way we don't want to give away too many things.
Get ready. I hope everyone has their note-taking equipment, supplies, your old school paper, pen, pencil, whatever. Get in where you fit in.
Yo, yeah,
Good point. That's a good point.
We here.
On deck.
We here. All right. Well, without further ado, I'm about to pass it over to Jolene, my wonderful co-host. So, ladies and gentlemen, the wonderful Miss Jolene GC.
Hey, y'all. Good afternoon. I guess it's low-key evening. This time
I mean,
of year.
if it's happy hour, it's evening time.
So good evening, everyone. Welcome to Trade Talk Tuesday. I'm Jolene GC, your co-host, along here with my other co-host, Monroe, and our special guest, ...
Hey.
Davis, aka Showtime. And we are talking today about ETFs, sprinkling some options in there. This is the day that you don't want to miss. You want to make sure that you are writing these notes down, getting all these ticker symbols, asking all your questions, because today's market was hot. So the Dow was up by a little over 2%. And let's, Boeing had a lot to do with that. S&P 500 was up almost 2%, and NASDAQ was again almost up 2% as well. So we had a good day overall. Every single sector today was in the green. There was no downtime for the sectors at the close of today's market. So top performers, tech, tech stays in the lead. Healthcare with these coronavirus, and getting closer to not a cure necessarily, but treatment or a vaccine. And consumer discretionary. I got a text message today from one of my friends saying that the line for Ross, for example, was like a mile long. So
What was going on?
Retail coming back.
I hear that there's supposed to be some ridiculous sale going on at Ross. It's like a fire sale.
It's like 80% off. So people were like really going ham. And then for the bottom performers, you have utilities, real estate, and communication services. So that's, like your Facebook, your Disney stream, and all that. They kind of weighed down on the market today. However, again, every sector was in the green. So that was your really brief market overview. And now I want to turn it to our guest we have here today, Shay Davis. Okay, so let me tell you how I know Shay Davis. I know him in his capacity as a filmmaker. Last year, I was able to go to the set of one of his latest films, and that was my first time actually being on set. And it was really fun, Shay. I had so much fun.
Thank you.
And also, he's an entrepreneur. He's also an investor, and we'll hear more about his investor perspective. He's also a husband and a father.
Yes,
So we have a well-rounded investor here. Everyone can find out some ways in how to relate. So welcome to the show.
Yes, man. Welcome.
Thank you for having me.
So tell us, let's hear about how you got into investing. What's that story like?
Well, the funny part is I came to Mark when I knew I was about a year out from our wedding. So I wanted to have, we wanted to go all out. I guess that's where the nickname Showtime comes from.
Yes.
So we were planning a Costa Rica wedding, and I wanted to get up as much as I could. So he taught me and a group of other individuals the ropes, and I hung by him close so that I could learn how the market moves, how to look into the future to see where it's going to go, and get out before it becomes too late for you. And from the wedding, what ended, not from the wedding, but as we were moving closer to the wedding, we actually caught that wind in 2018. And I had never made that kind of money that kind of fast. So it became, okay, well, let's strategize this out because we want to be smart about how we begin spending. I had easily gone over what I needed for the wedding, and it was more so now about life planning. So I started out wanting to marry the girl of my dreams and build a family, and the finances from there allowed me to build out a future plan that also helped with our business endeavors later on.
Okay, so Che, let's see. That's really interesting. So it started off because you wanted to have this elaborate wedding, and then hey,
Good
go
story.
beyond the wedding. Okay. So as you saw like the potential in the market, what talk to me about like what your investor mentality began to be.
Okay, so when we started, the goal was to maximize what you had. So there was a certain amount of money that I wanted to put to work into the market. And, you know, when you first start, you're scared about losing all the money that you put in because you don't know what could happen or how the market moves. And so, you know, with any good business strategy, the first question is, how do I limit risk, right? So I went in thinking, how do we limit risk? And as we sat with the group and Mark was breaking down the graphs, I began to understand and love the idea of options and how to protect ourselves with the ETF trade options versus singular positions. So as we looked into ETFs, the goal became to find those wartime generals, if you will, that you knew could survive markets or would move the market. So my strategy became, okay, let me find the ETFs with the companies that if I had enough money, this is the company that I would invest in, but I want the most exposure to this company. And that was one of the key things that Mark taught us in the beginning. ETFs are a good way to get exposure to sectors or companies that you really value. So as I started looking into those, I came across some knock them out the park ETFs. And what I did was I divided up the little bit of money that I had at that time. And the big game became, when you're trying to limit risk as well and you're doing an options call, you want to buy time, right? So how far can I put this out in tandem with my agenda for when I want to pull out the money? So with that particular strategy in mind, as I loaded up on my positions, and I was one of those guys, I was like, buy cheap and get as many as you can, as far away as you can. So I definitely loaded up on my contracts with an understanding that it may not reach the strike price that I set it at, but I believe it's going to move towards this, so it will grow my portfolio. And that particular move, if I can give a personal testimony, is how I reached my first six figures in life. Honestly, I'd never done that at a job, so I was actually working when it went into six figures, and Mark was like, "Why?" So, needless to say, learning the investment game changed my life, and Mark Monroe, Big Bro, changed my life and helped me see a different strategy to create your own vision and build on your entrepreneur spirit.
That is amazing. So what I'm hearing is your first strategy really was about leverage and momentum.
Absolutely.
Okay. So tell us what your very first trade was.
Very first ETF, giving off the muscle was XLK.
Mm.
Hey, XLK. Forever. And because we in that particular group, we all wanted exposure to technology. We knew that it was weighted heavy with Microsoft, which all time, I believe, is like one of the greatest singular stock moves you can do. And of course, We all have Apple products, so we all know about what Apple has the ability to do. So just those two alone had us very interested. And then my second move that I did, Mark taught us how to research. So I knew that I definitely wanted exposure to Amazon. And I was like, whatever happens, Amazon's dominating out here, and I wanted to figure out how to get into that. So I feel like the first one was given to us. You know, we learned about XLK and we learned how to read its graphs, but I went searching for Amazon exposure and found XLY. And that became the bread and butter of my portfolio.
Okay, so before we get to the top picks of today that you can purchase tomorrow for your come up, I want to know about a time that you didn't listen to Mark and how much did it cost you?
Okay.
Oh man, she's doing.
Okay.
She's coming in hot.
Yes, she is. Yes, she is. This is a hard story. So, the time that I didn't listen to Mark, I would say any great mentor, they let you know once you reach a certain percentage point, they're letting you know, okay, maybe it's some time to shave some profits, right? Like once you clear 200% of what you put in, you should definitely be putting some on the sideline. But I had so much more run time. I was like, nah, I'm good. I'm gonna let my money keep making me money. And we were well past what we need to be past. I didn't think the market could drop significantly. So I was like, if I have a bad day, and this is before I knew about stop limit orders or anything like that. I only knew how to buy and I only knew how to sell. As we move closer, that December of 2018 hits and the market goes on this rampage drop. Mark had already told us to shave profits, but when you're sitting at here's the thing, when you're sitting at a certain figure amount, you start to think, ooh, it could get to this amount. And when it gets to this amount, it can get to this amount. And what I quickly learned was the market's not your friend. It's not here to supply all your wishes and dreams. And when that hit came, I think it probably cost me, I would say, slightly north of 30K, because you were trying to hold on strong to get that rebound. And then you panic when the rebound doesn't come in the same week, right? So that was a hard lesson. Luckily, we had gone on a good run, so there was plenty left to play with. But you had to begin to rethink and re-strategize, and that's when I started looking into longer calls, so that the strategy would be that I could survive any test because I had enough time with my contracts. In that particular move, we were playing with months versus a year or years. And it's just different when you see yourself running out of time and you don't know if it's going to rebound in time. So the first lesson, and the hard lesson, was Mark telling us when to shave profits.
So not shaving. And it wasn't November, it was December. So not shaving cost you $30,000.
That's correct. And I was talking to.
It was a lot of phone calls during that period of time. A lot of uneasy phone calls.
Absolutely. I was talking to my cousin, and I never heard this acronym before because I started teaching him how to invest from what I had learned. And he hit me with the acronym. They call it FOMO, FOMO, fear of missing out. And while I didn't know that I had FOMO at the time, I was like, yeah, that's what it was, but that's stupid. Because it's not an effective strategy on how to take profits and reinvest your money. You are kind of just assuming that the market's going to be hot for the next year. And that's not the way the market works, as we learn from earnings calls and everything else. There's always a pullback when there's a run up.
Yep. So, we have a question from Ernest here. He wants to know, how do you see your investments changing as you become a more seasoned investor?
Is that to me?
Yep.
For you. Mhm.
Oh, how do I see my as I become more seasoned? I start off with ETFs because I like to take as much risk away as possible, and that's what ETFs allow, that leverage to have exposure, but not as much singular stock risk. And as I increase my profits in my ETF and I can cash out of those positions at whatever percentage that I set, I move into, or the plan is to move into singular positions that are a little bit riskier, but I've done my homework, I've done my studying, and I welcome that risk because I have more liquidity now on my side to get into those singular positions to grow my portfolio. So I'm shaving profits, meaning I'm not taking myself all the way out of the ETF that I'm in. I'm taking enough out to also try to expand my portfolio into singular positions. So that becomes my strategy of how to grow. I think that you should have appropriate exposure to a singular stock that you really like that company, but you should also be leveraging your risk with long-term calls on your ETFs. So just in case something happens, you've got a whole sector behind you, not just one company behind you.
That's a really good point and good strategy. And what I can appreciate about what you're sharing about your investor journey is the consistency, and the two themes I hear you saying over and over again is leverage and momentum.
Absolutely.
So I appreciate that consistency. And as you brought up ETFs, I would like to kick it to Mark now, because today is all about ETFs. And obviously, feel free to hop in. You have an opinion. And Mark, you can answer this question about demo accounts. I already know what you're going to say, but go ahead.
No, I don't use demo accounts. I do have what some people call burner accounts. Sometimes I'll set up a few accounts to like pretty much trade as if I was other people. But for the most part, no. If you're going to be a solid and sound investor, the only way that you're going to do it is you're going to have to step out there. And if you lose, I mean, if your investment loses, or if it loses value, or you struggle, that's a part of the learning experience. That's part of the journey. But yeah, I'm a huge believer that if you want to walk on water, you got to get off the boat.
Okay, there you have it. A biblical reference. All right. So let's talk about ETFs.
All right. So yeah, so what Jolyn said, today is all about ETFs. I mean, across the board. So let's break into a few of them, shall we? Yeah. Now, what Che had said was super beautiful in the sense of, when you go with ETFs, it's less risk. So you've taken off some of the risk off of the table. So if a stock that's within the ETF is, let's say, for example, an XOK, if XOK in an Apple that sits inside XOK is having a bad day, but Microsoft is having a phenomenal day, then those two essentially will offset each other. And then the other positions that are also within that same ETF, if they're still having a great day, but Apple is just having a bad day, then the ETF can still move forward. Versus if you're in just Apple stocks singularly, then pretty much if Apple's having a bad day, well, you're right along with Apple. You're having a bad day too. So it's pretty much like misery loves company. All right. So the first ETF that I want to introduce you to, and mind you, with all of these ETFs, you can literally not only just buy the stock, you can buy the ETF, or you can trade it as an option. So it's available to everyone out there. So it's open season. So I'm going to start it off with a little bit. This one goes by the ticker of F as in Frank, D as in dog, N as in Nancy. F.
Oh, it looks like we lost Mark.
Okay.
All right, so stand by as we get him back in. Hold on real quick.
Mhm.
All right, so I just sent him the link. Yeah, Mark did freeze and he will be back shortly.
Perfect, perfect.
Rennie said cricket. Bria, hey girl. Okay, so while we wait for Mark to get back, he left off on ticker symbol FDN. And so what we're going to do is get that pulled up right quick. Stand by.
Okay, I'm back.
Okay,
Nice.
good.
Can you guys see me?
No.
Okay.
Not yet. That was just your picture.
There we go. All right, so we are officially back in. I don't know what that was all about. I'm trying to load up the other machine, but apparently something's going on here. So let me try to go ahead and restart.
All right. Well, you left off on FDN.
I was.
Okay, Killer Cam, aka Kamari. This is where did Monroe go? No bars.
There we go. Sorry about that, y'all. Apparently, All right, so I'm gonna just share the screen from here. Share content. And let's go ahead and give this participant.
Hey,
Okay,
Abby.
so now I can go ahead and share. I don't know what that was all about. Somebody needs to get on the phone with Comcast and ask them what's going on. All right, so can everybody see the screen?
Yes.
Yes.
All right, sweet. All right, so looking at this is the wonderful FDN position. And so the reason why I like FDN, of course, for those out there that want to have their dividends, they can receive that as well. But at the same token, if we look over the trajectory of this ETF, it's a thing of beauty. So this is the ETF over the last 6 months. This is the ETF over the last year, 2 years. Now, clearly you can see that this is all coronavirus.
Mm-hmm.
And then here we are 5 years, just beautiful growth. When we look at that chart, that just says beauty. And so pretty much here's the other thing I do like about, say, for example, FDN. So I'm going to switch my screen share over to actually pulling up. Instead of doing just charts today, I'm going to take it a little bit further for everyone. So that way everybody can follow along with us. So this website, if you would like to follow along with us, is called ETFDB. And on ETFDB, it allows us, hold on, let me go ahead and make my text a little bit larger because I can see it now. People are like, hey, Mark, I can't really see this text. So let's go ahead and enlarge the text. If that's better for everybody, I hope. All right, so here we are. Here are the companies that are essentially within the FDN First Trust Dow Jones Internet. These are all internet companies. So the beautiful thing that I love about internet companies is many times they're exempt from a lot of the issues that plague, say, for example, other tech companies that deal with manufacturing or developing products. They're all services based. So which means that they're not tied to a specific geographical location. And like I said, they just perform well. All right, so this one would be known as what we call an equal weighted ETF. So there's a lot of large cap companies in there, meaning that they are valued very high. But at the same time, they're not, say, for example, the percentage difference between one position to another, it's pretty equal based upon what they're weighted in the market, but at the same token in comparison to each other. Now, as I go through and explain some of the other ETFs, you'll see what I'm kind of talking about, where you'll see that some positions are weighted more heavily than the others. But let's look at some of the top companies that are in there. You have Amazon, you have Facebook, you have PayPal, you have Netflix, you have Cisco, you have Salesforce, 2 Google positions because there's 2 Google stock tickers on the market. You have DocuSign, which apparently they're on a tear this year. Then on top of that, you have Okta, you have Twitter, you have GoDaddy. Now, the beautiful thing about it is these are just the top 15. Now, within this also is there's 42 companies in this ETF total. And when we look at the percentage, 47% of these companies are in the top 10 as it pertains to top 10 companies in the S&P 500. That's amazing. And then when we look at it across the board in the top 15, there's 61%. And then when we look at companies that are in the top 50 companies in the S&P 500, then they represent 100%. That's incredible. That's amazing for a portfolio. So something like that, you can't really lose. Well, you could lose, but I mean, by the way, one is our legal department definitely tells us that we are just giving you what we would do. This is not something in which that we literally just say that, okay, hey, you can just go out and just automatically do it. But we definitely challenge you to go out there and to do your own research. All investments are risks. So with that in mind, just, of course, take what we say with a grain of salt, because we're never 100% correct. All right, so we have FDN. The next company that I would like to bring up is, and this one shouldn't really be a shocker to some folks, but here we go. We have XLY.
Nice.
For some reason, I'm not loading over here. Oh, well, anyways. So as long as you guys can see me over here, then pretty much what we have is we have XLY. Now, XLY is known as the consumer discretionary ticker. And so within consumer discretionary, if you pull it, well, we're waiting for it to pull up, but if those of you guys that have your CNBC app, can you guys still hear me, Jay?
Yeah, we can.
Oh, okay. Like wondering like what's going on. All right, so somebody just texted me saying, oh, you dropped out. So XLY has pretty much Amazon, and Amazon represents 24% of this position. Now, within that position also, you have other things like, for example, a la your Home Depots, and say, for example, your Targets, your Starbucks, your McDonald's of the world. But the number one position, if you want Amazon exposure, you're going to take on XLY. Now, notice what I had said. Amazon represents 24% of the XLY position, whereas FDN, it only represented almost 8.5%. So why do we say that? Those are considered large cap weighted ETFs. Now, the other ETF that I had showed you guys, it's equally weighted. So which means that across the board, essentially most of the companies in the portfolio have some form of equal weighting to each other. Versus, say, for example, in a large cap weighted, it's measured based upon how large the company is across the board. So while we're still waiting for Zoom to get its act together over here, I don't know what's going on, but so I'll come back to the stock ticker. Just bear with us. But the other the other ETF that I wanted to bring up also is a ETF called HACK, HACK. I'll let everybody take some time to pull that up. Oh, well, I came back in. Go figure. All right. So the beautiful thing that I love about HACK. Oh, there we go. All right. So just to go back on the XLY position, just so that way we're bringing everybody up to speed. Here's XLY in the past 5 years. So I'll work my way back. So we have XLY for the past 5 years, 2 years, 1 year, 6 months. Growth. That's what we're looking for. We like growth. something like XLY, again, like I said, you're going to be taking it on because of its exposure. But for its exposure to Amazon. But like I said, it has a few other great companies in there with your Home Depots, your Walmarts, your Lowe's, your Targets, and so on and so on. Very great. A little bit different from the retail sector. You do have some retail companies in there, but these are more so consumer discretionary. And I wanted to add this in there because of the fact that looking at it, when you look at the consumer discretionary sector, they're starting to become more like consumer staples, which is very, very interesting. Beforehand, we knew consumer staples of your Procter and Gamble's, your Johnson, well, some folks say Johnson and Johnson, but I mean, pretty much companies in which that, you know, that if the world goes to, if it's coming to an end, you're probably going to need to buy cereal, toothpaste, and everything else, toilet paper, all those great things in order to keep moving. Well, the reason why I look at consumer discretionary as the new modern day consumer staples is because of the fact that when we just went through the pandemic, where were those places that you were shopping? Don't worry, I'll wait. All right, so that's the reason why I chose XLY. It's something that it grows very, very well. Today it was up $3 a share, which is ultimately 2.3%. The stock ticker is currently trading at roughly 128, I think, or 131. So good position. I definitely stand by it, but you know, of course, do your own research. All right, so like I said, the next ETF that I wanted to introduce everybody to is a ETF called Hack. And that's cybersecurity. Now, as we know, like getting into cyber, so as we know, as we move forward with technology as it progresses, cybersecurity is going to be very, very huge. And so looking at it, you're going to be seeing that cybersecurity ETF is definitely going to be one of those great ETFs that you can hold on to. It's fairly cheap. It trades at $44 a share, or 44 and a half. And like I said, overall beast with some of the companies that are in there. You have Cloudflare, you have Spunk, or I should say Splunk. You have Avast, which is also an antivirus application that really beat out Norton systems. You have Akamai, which you hear a lot of value investors talk about. You have Juniper Networks. You also have Trend Micro. For anybody that knows Trend Micro, when you buy anything at Best Buy, then you essentially get loaded with Trend Micro antivirus and security software. So they're definitely a great company that's within the ETF. And if you notice across the board, which I'll pull up on ETFDB for everyone, if we can get that glorious data coming through, you can also see that within it, I'll pull up exactly what the weighting is. So that way everybody can see exactly what I see. So here we go. And so when we look at the holdings, it's more so, like I said, an equally weighted ETF. Now, one thing to know, if you're an option trader, equally weighted ETFs typically cost more to trade. They can be very, very expensive. They can do very, very well. And at the same token, they could also break your heart. I mean, shout out to all the SMH folks out there, but you know. So an ETF like, say, for example, Hack, an ETF like FDN, and an ETF like SMH, they move very, very well. They bring on a lot of momentum and growth. And it's very good for you to leverage because it'll give you high liquidity if you do the right trade. Now, if you're just a stock investor, then again, you just get steady growth. And on bad days, I mean, it just gives you opportunity to step in and buy. I would definitely recommend any of these ETFs that I'm going to introduce today for folks in which that are looking to, let's say, if you don't have a lot of capital and you're looking to just buy, say, for example, something that's a little bit more steady eddy, then these will definitely take you there because of the fact that they will consistently grow as the industry or as the sector grows. And then from there, you will not have to worry about, say, for example, the singular the singular exposure like we had mentioned early on, which means that if one stock falls, then you're down. All right, so here is hack, just for the last look for everybody. And then I guess I'll give one more stock, which is CLOU, Cloud. For anybody that understands what I'm getting ready to say, great. If not, that's all right, because you're gonna learn anyways.
Mark, I have 2 more on my list.
Yeah, I know. I kind of wanted to save I wanted to save the last one for,
Okay.
you know, after if we have any questions.
Mhm.
But I mean, if you want me to, I can just rip right through them. That's fine.
I'm looking through.
All right, so here we are with cloud, and the cloud is pretty much just cloud computing.
Nice.
I mean, it was pretty simplistic. Now this stock is probably the cheapest out of all of them. It's trading at $20, $20.50, so $20.50 per share. Again, an equally weighted ETF. But for those in whom that want to have interest in, say, for example, Zoom without paying Zoom prices, or having to pay for a workday, a lot of, say, for example, new IPO companies that are doing well are in here. So, for example, you have companies like Twilio, you have Zoom, you have Shopify, which just did a deal with Walmart. You have Workday, you have Akamai again, you have Dropbox, and you also have Salesforce. Those are some of the top companies in there. I want to pull something up on ETF DB, but first let's go through this chart, shall we? So here we are at 6 months. Here we are at a year, 2 years. Now notice what I'm showing you right now, April to April, and here we are at 5. Now the reason why you notice that this chart really hasn't done that much moving is because, like, one of the other ETFs that I had introduced earlier this week or last week was Hero, and so this is also a pretty brand new ETF. So just keep that in mind. But if we're looking at, say, for example, its performance, let's go and see what the charts, or let's see what the actual ETF database says. So I pull in CLU or CLOU, and let's go to its holdings just to find out what's inside. So remember, these are the companies that I said, they're all equally weighted, but then this is where it gets interesting. There are 37 companies in there. 46% of those companies that are top 10, that are in the top 10 sectors of, say, for example, across the board. When we look at top percentage of assets in the top 15, 64% of the holdings are there. And then when we look at 100% are in the top 50 across different sectors. That's pretty amazing also. So again, when you look at this position and where we're at, this is pretty much a ground floor ETF that you would be able to get in on and enjoy, you know, that wonderful write up. This is definitely one of those positions that if you have very little capital, but you want to see some steady eddy growth or steady growth, this would definitely be it, because you can keep adding on to it, especially given how cheap it is. Do we have any questions so far, or?
No, not yet.
Okay. All right. And the final position that I'm going to introduce then to everybody is RTH.
We have a question.
Yep.
He wants to know, what is considered quote unquote little capital?
Let's just say under 1,000. After I guess I should take away the word little, because I guess after that one joke from what's her name from Insecure, where she said anytime that you want to make somebody feel bad, you just mention the word lil, it'll just automatically just ruin their whole life. So I don't want anybody to feel like, you know, that whatever capital that you have at a time is bad. I mean, whatever capital that you have is where your starting point is. Doesn't mean that that's where you're going to finish. All right, so let's look at RTH. Now, this is known as the retail ETF. So again, here we are at 5 years, though it's only been in existence for 4. Let's look at the last 2 years. No, does anybody notice a trend here of where this is headed? Anybody see that? Okay.
No, we don't see that. We're still on the ETF database.
Yeah, I was gonna say the screen's frozen on the cloud.
Of course it is. Let's see.
In the meantime, since we're stuck on cloud, Tremaine wants to know, would the cloud ETF be better as an option position or stock?
You could do either one. I think I mentioned this with all of these ETFs, they're tradable. They should be tradable.
Now, a question for you, Mark. Now, with these newer ETFs, are they available for options trading? Because some of them aren't available and you can only do stock with them. For example, the Hero ETF that was given last week, that you can't do options with it yet, but you can do stock trading with it.
Typically, the newer ETFs, they take a little bit more time. So for example, like Cloud, that would be probably, since it's newer, it's going to take a little bit of time in order for that to literally solidify and become a tradable option trade. Okay. But the other ones that have been on the market for longer than at least a year, they should be probably tradable.
Okay.
All right, so can everybody see this? Yes, you guys can.
Yes.
Yep.
All right, so this is RTH. Now, don't spoil the fun over there, Che.
Well, I will not. I will not.
All right, so here we are. Now, if we notice any trends, tell me if you spot any trends here in the comment section. Definitely want to see who's been watching charts, but you know, where is this position going? If you could pull, I'll put out a challenge there. Anybody in whom which that it can find the trend, will probably give you some form of a gift, if not, you know, the gift of advisement. Who knows? So with the 5 stocks that we've been able to pull, if you can tell us the trend before, say for example, this session is up, there may be a gift for you. Jolene, I'll let you go ahead and regulate that section for us. All right, so looking at RTH, it's beautiful. Of course, anywhere where you're seeing all these positions, they pretty much suffer just like everybody else in the market. If you're looking at it over the last 3 months, chart looks beautiful though. If you're looking at it over the past year, still beautiful. 2 years, looking good. 5 years, come on.
Was it about to drop?
Who said that?
Rhea.
Don't think so. And here's the reason why. I'm glad you asked though. So I'm getting ready to, just so that way everybody can see this, because here comes the big kahuna here. We're getting ready to share the screen, go up, and let's pull it up on ETF TV. Now, mind you, you can pull up any other ETF on this site, and it's a good place to do some amazing screening. But let's look at this, and here's the reason why it's not going to drop. Amazon represents 24% of this position, and then followed by Home Depot, and then followed by Walmart, then followed by Lowe's, JD, CVS, Target, Costco. I could literally just stop there. Now, when we come down to, say, for example, the number of holdings, it doesn't have as many companies, which is kind of a good thing because it allows it to move a little bit more. And so when we look at that 74%, that's pretty much close to XLK numbers. And XLK is one of the top ETFs on the market. And then when we look at, say, for example, top 15, we're at 88%, top percentage of assets in the top 50. That's 100%.
Can I throw something in there? A little secret sauce about RTH?
I knew you would, so go for it.
Go for it.
For those willing to dabble in RTH, what you'll notice when you do options trading with RTH is going to be that it's going to be trading at low volume, meaning it's not going to have millions of people in there like maybe your XLKs and your XLYs. So it's going to look like your money has stalled for a second. As soon as that pops, they have a tendency to get harder than everything else. So we're talking about a quadruple multiplier sometimes on which you may have initially invested, but you got to watch it because with great power comes great responsibility. If it can quadruple in the right direction, it can also quadruple in the wrong direction. But it is a fun stock to play with because it has a lot of the positions like XLY. And if you catch it when it's going in the right direction, it will be more than beneficial to you.
I agree 100%.
We had a question from Kamari. Do you recommend active or passively managed ETFs?
To me personally, it doesn't really matter. It just, what matters to me more so is just the quality of the companies that sit within the ETF itself.
One thing we did not cover is we did not take a peek inside of Mr. Davis's portfolio.
Uh-oh, we didn't look inside his lunchbox.
Yeah.
Did not.
Okay.
Uh-oh,
Okay,
so
okay.
are we asking like, how is he doing this year?
You know, whatever he wants to, you know, share with us, you know?
Yeah, feel free, man. You know, this
you
is
know,
where I sit back.
Performance
No, no, no.
percentage.
Well, because big bro, Mark Monroe has the sharing screen, and are you able to share what the pictures that we took earlier, Mark, by chance?
I think I can possibly pull up one of them. Yes.
Okay. If I don't mind sharing the percentages of the portfolio and also answering any questions on how I reach those particular percentages in my portfolio.
Very brave. Very brave.
Right. But as far as what my portfolio looks like, I'm very tech heavy, and that puts us in strong positions in XLK.
You ready for it to go up?
Huh? I'm ready. I'm ready for the breakout.
Y'all, this is like for
oh
everybody that's paying attention, like this is about to be groundbreaking here.
Absolutely, absolutely.
All right,
the breakout comes at 104. Okay, so we've got the percentages up. So as you guys can see under the total gains, here are my percentages. Now, my lunchbox strategy, if you will, is to buy cheap, buy far out, and buy quality ETFs. So I want to get as many positions as I can, as far away as I can, with as much time as I can. As we were talking about, or as I was telling everybody earlier, the goal in any successful business is to limit risk. When we're talking about options contracts, I don't want to run out of time and find myself holding my lunchbox instead of eating it, or eating out of it, if you will. So
there you go.
I bought far away in these positions, and I bought these positions cheap, but I bought a lot of contracts in these positions to really increase that multiplier. So as I came across the 1,300%, you know, I got that for a steal. And now I have over a year left in the position. And that's going to take me well past those figures that we were talking about at the beginning of the show. And the XLKs, you know, when, as Mark likes to say, dance with the one that brought you.
Yes.
When you know something is when you know it's a good day and you know it's a good buy, you always want to buy it as cheap as you can. So as soon as the market dropped in that February, March timeframe, you know, a lot of people tried to chase the market by doing puts. We don't run after the market. That's not a smart strategy.
We do know. What do I call it? What do I call it, Che?
We don't chase the market.
Yeah.
You got another word? You got another phrase? Hit them with it.
We don't ambulance chase.
We don't. Yeah. And so we bought when it was low, and now you can see in just a couple of months what that turnout looks like, because we bought them for as cheap as we could possibly get them. As what is it? The tradition goes, when there's blood in the streets, we buy.
Yeah.
So when we see those red days and we have money on the sideline, we activate some of those funds to leverage ourselves for the future. And this is what the future can look like.
So I have a question for you, Che. So like, without going into too much greater length of detail, based upon like the type of trading in which that you're doing, and then we want to talk a little bit about what you're also doing on the side really quickly. So 2 questions. One, moving forward, what are your goals? like based upon like how you're going to end out this year or going into next year? What is your goal? And then two, what are you working on right now?
Are we talking about from an investment standpoint or just entrepreneur goal and ending out the year?
Give us both. Give us both, brother.
Okay. From an investment standpoint, the goal is to stay long in positions. We know that because the economy was shut down during this pandemic, like think of it like turning off a water faucet. Now they've turned back on the water faucet and we've got time to catch up from what we've lost. So essentially, if you had a position that started at 130, but then it dropped all the way to 100, now it's returned to that 130. It's pretty much returned to where it was at. And now that the water is running again, we have you can put an expectation, but do your research before you do anything. But you can say, well, now this is going to run the course that it was originally supposed to run. So there's a lot of run-up room coming towards this year. And in theory, there's a lot of run-up room in 2021 and 2022. So my strategy becomes, as my percentages grow, I want to shave my profits and I want to get into longer positions for those following years. Remember, if I buy a lot of contracts far away at a cheaper price, as time goes by, I'm an investor, not a trader. I'm okay with the time elapsing so that I can do my run-ups. My run-ups also protect me from taking any significant losses. If I have a bad day, I still got over 180 days to recover from that one bad day. So as I push towards the end of this year, my goal becomes to have another 6-figure year, but I want to turn that into a 7-figure year as we move into the 2021 positions and 2022 calls. So the further away I am with a significant amount of contracts, the happier I feel about my investment. And then what was the other question, Mark?
What are you working on, man? Tell the people what you're working on.
All right, on the entrepreneur side, we are working on our first feature film, and I'm that guy that jumps into stuff. If I'm passionate about it, I'm going to figure it out. We wrote the script. We received investments from our parent company, and there's been a lot of beautiful things that happen with the script, with the project, and a lot of bad things that happen with the project. In our movie, where we're discussing a lot of the kind of the secret society approach to the civil unrest that we're seeing right now, you could say our protagonist is attacking the 1%ers in the movie and holding them responsible for the circumstances in his particular story world. In pulling off this film, I've learned the bumps and bruises that come with being a producer, a director, and a cast member in in the film. So at this point, what we're doing, similar to anybody that's studying stocks, you have to reposition when you take some hits. So as a director, you have a way that you want your movie to look. And I'm a firm believer that when you're making something like a film, you have the ability to get it done the right way. So the goal is to find a way to get all the shots that you need. The hard lesson that I learned in making a movie is a movie's not built scene by scene. When you really get into the meticulous details of making a film, it's built shot by shot. Those 12-hour days, those 14-hour days, making sure you get every angle that needs to be a part of that scene, those count, and you can't skip that process. So there's no substitute for hard work, essentially. And so what I've been able to do, because I've been lucky enough to have great mentors and a team in our parent company that believes in what we're doing, is leverage our entrepreneur money with what we're doing in the stocks. And the stuff that we have to reshoot, we're now investing in ourselves from the stock market. So we're able to put this story together the way that we want to and present it in a way that I think and plan for it to be a great cinematic production.
So, and you know, I guess the last piece that I want to kind of leave with everybody is that, you know, you're seeing these percentages that are up there on the screen as it pertains to Chase journey this year. I mean, and a lot of folks, they're going to look at like, okay, hey, these large percentages. And what I want everybody to take into consideration is that, you know, he's here now, but you know, when he started, it looked nothing like this. I mean, he's had great success to get to this stage, but I want everybody to know, like, it's like to reach that dream, it's like, you know, you got to go through the journey. And that's something in which that every investor or every trader goes through. And with the amount of hard work and, you know, the research that you put in, you'll be able to see these types of returns. I always say the more you learn, the more you earn. And that's where we're focused here at the Come Up. Jolene, did you have anything else that you wanted to add?
I just to thank you all for, you know, sharing your wisdom today. And also, I found it really interesting what you shared about the shot by shot, you know, and to me that reflects like the research you got to put in, you know, shot by shot, research day by research day, hour, whatever, to build your strategy and build your trading plan. So thank you so much for being a guest today. It was really awesome.
Thank you for having me. Thank you for having me.
You officially made it past the hot seat. So you are now officially, we can actually now knight you as one of the members of the Cool Kids Club.
Hey, I would love to come back, and I definitely want one of my assets over liabilities shirts. Knight me, crown me.
Oh, well, that's a different group. That's the Earn Your Leisure crowd. But I mean, we're definitely coming up with some merch over there from Jolene and her squad.
Matt, shout out to Matt Reese, who was on their show last week. Was that last week? Yeah.
I think that was last week. Yeah.
You said a merch.
Yeah. So we're supposed to be coming up with some beautiful merch for everybody. So that way, it's like, you want to get it, you can get it. But yeah, we're definitely gonna be working on that. But I got you, bro. Well, everybody, thank you for joining us. If you have any questions, you know what to do. Go ahead and smash that like button. Go ahead and share this stream with everybody else, people that you know that need this type of wisdom. We apologize for a little bit of technical difficulties. As soon as I get off this live stream, Comcast and they're going to have a little talking to. But for the most part, we hope that you guys grabbed a lot of value in what Che spoke and his journey as an investor. We're going to continue to keep bringing more voices and more faces that look familiar and showing you their journey as well, from beginner, novice to intermediate and master level investors. So hopefully this helps you in your journey. Until next time, we out.
Peace.
Look at this.